In total, my stock portfolio was up over $100,000 last year, an increase of over 230%. In this video, I'm going to be reviewing what's happened to my stock portfolio since then, walking through each of my actual stock positions in my brokerage accounts, talking about why I own those stocks, as well as what I see for those stocks in the future. Lastly, stick around until the end of the video to see what changes I made in my stock positions in this month. So we're going to start out by looking at my Charles Schwab brokerage account, which is my taxable brokerage account, and it's the smallest of my accounts. I'm going to be blocking the total amount for now, but we'll get into that later once I look at my individual stock positions. For now, you can see this is my stock chart from last year, and you can see how much it rose over the course of the year. And here's the chart for just this month. And you can clearly see that it has not really gone up or down nearly as much as it did last year. Overall, my portfolio has been relatively stable for the month of January, especially considering how much it fluctuated last year. But honestly, I don't expect to have the same kind of fluctuations this year as I did in 2020. What with the effects of the virus as well as the election happening, it was just a really crazy year. So let's not waste too much time and dive directly into the individual stocks that I hold in this Charles Schwab account. So you can see that this account has a total account value of just over $50,000. And just today, it's dropped around $1,800. And you can also see that my total gain and loss in this account is just over $22,000. Now that gain and loss is not just for this year, that's for the entire time that I've held this account. So now looking at the actual positions I have here, you can see the first position here is Alteryx. Alteryx is barely even a position for me. It's just a tiny $1,000 position, which I've held on to despite the fact that the stock has basically not moved in over 6 months. Alteryx was a company that offers a platform that allows companies to manipulate their data more easily. The problem is once the pandemic hit, a lot of companies decided to start cutting back on the expenses, especially with non-essential software. So Alteryx's stock took a big hit up front. Now I decided to hold on to the stock because I thought once all of this kind of passes over, they're going to pick up and have the same kind of revenue growth that they did before the pandemic. The problem is it now looks like that might not actually be true. Alteryx's previous leadership was previously pushing for on-premise software, which as we've seen is kind of going out the window for most companies. And so very recently, Alteryx actually got a new CEO who then brought in a whole new C-suite from Palo Alto, and they're now going to be pushing for software as a service technologies. Now I do think this is absolutely the right direction to go, but because Alteryx is going to be A, having a new leadership team, and B, completely changing their strategy, this is going to be a very risky stock to hold going forward. So I haven't sold out of it yet, but there's a good chance I do sell out of it next month. Next up, we have Cloudflare, which is one of my larger stock positions. In this account, I only have around $6,700, but you'll see later I also have some more shares in my other account. My total cost basis in this account has only increased by $13. It's basically been flat, and that's because I only bought this extra Cloudflare stock a couple months ago after they'd already seen a big run up in their price. What Cloudflare does is basically make the internet work better. They provide DNS services to make websites load faster. They provide firewall protection to protect against DDoS attacks. Even though the stock hasn't moved that much right now, I fully expect them to grow in the future as they just keep on launching new products, and they have a rock solid leadership team that's just performed really well over their entire lifetime. Next up, we have Crowdstrike. Crowdstrike for me is just over $10,500 invested, and in this case my gain is over $7,000. So the vast majority of the value in the stock is just from the stock appreciating. Now I made an entire video covering why I was investing in Crowdstrike, and a big reason for this stock price's increase was because of the massive SolarFlare hack that occurred around a month ago. After being hacked, SolarFlare decided to deploy Crowdstrike's technology to avoid that issue in the future, and that was a really big boost for Crowdstrike's publicity. And I think the fact that they really do have an excellent product that is cloud native is going to bode really well with a lot of companies moving to the cloud in the future. So even though this stock position has grown into my largest stock position, I'm very happy with that allocation, and I'm going to keep it for now. Next up, we have Datadog. Datadog basically has the goal of combining infrastructure, security, and applications all through what they call a single pane of glass, so you can see your entire business operations in a single window. This technology is going to become more and more valuable as more and more data is produced and as companies move to the cloud. So this is both a strategic investment as well as a good investment in the company simply because they're performing really well. Their revenue's been increasing every quarter, and they've been improving their financial metrics consistently. In this account, I have just over $12,000 invested in Datadog, with around $4,000 of that being a gain. Now this gain is only around 30% of my current market value, but part of that is because I've invested more money in Datadog as it's grown, simply because I think it's a really good company. And then last up, we need to look at Zoom. Zoom was probably my most talked about stock in 2020, 2020, and you're almost certainly familiar with it. Their video conferencing platform took the world by storm in 2020, and in a lot of ways, its name became synonymous with working from home. This, of course, caused their number of customers to grow exponentially, and so that's why I have a $21,000 stock position in Zoom right now, with over $11,000 of that just from a gain. Now, if you watched any of my stock reviews from last year, you'll know that this is actually a slight decrease in the size of the position from what I had before. In Zoom's last earnings report, they reported that they're gonna be slowing down their revenue growth going forward simply because they've already maxed out a lot of the market in the United States. Now, there is still hope that they can grow internationally as well as by launching new products in the US, but that's not quite as certain as the growth that they already experienced, so I decided to trim back my position a little bit. I still think that Zoom absolutely has the potential to double in price once again. I just don't want to keep as much money invested there when I have other potential investments like CrowdStrike to invest in instead. So that's my Charles Schwab portfolio, and you can see that in total, my market value is $52,400. I've only invested $29,700 in this account, and the remaining $22,500 is all from stock price appreciation. So this is how much money I've made by investing in these stocks. And one other thing I'm going to call out here, Charles Schwab has all of these companies rated as either a D or an F. And I will tell you, they've had that rating since I first owned them. In general, whatever your brokerage says about the quality of an individual stock is just them guessing. They're not actually providing any kind of value by using these ratings, and I personally ignore them. So now that we've looked at my Charles Schwab account, let's now look at my larger account with Vanguard. So I pulled up here my Roth IRA account, and you can see that this account is substantially larger, with over $93,000 invested. The reason this account is so large is because basically as long as I've been working, I've maxed out my Roth IRA every single year by putting $6,000 into the account. This is a really good way to grow your money tax-free, and you can also make trades in and out of stocks a little bit more nimbly without having to worry about the stock implications. So now let's look at the actual positions that I hold in this account. First off, we have Cloudflare once again, which I already talked about with Charles Schwab. In this account, I have an additional $20,000 invested in Cloudflare, which is larger than just my position in Charles Schwab. Next up, we have CrowdStrike, which again, I already talked about. And this is an additional $33,000 invested, making it my overall largest stock position in both my accounts combined. After that, we have Datadog, which is an additional $25,000, almost $26,000 invested in this account. And then last up is a company I haven't talked about yet called Okta. Okta provides identity access management services, kind of like single sign-on. They make it so that enterprises can have customers access all of their different applications while only needing to log in through one centralized platform. While this might seem like kind of a small thing, when you're dealing with an enterprise that has all these different levels of security, having one system that can integrate across all of them is super valuable. Plus, the way Okta is built works really well with cloud technologies, which again is kind of the trend that we've been seeing for the last couple years. Now, my Okta position is a little bit smaller than the others. It's only $12,700 invested, and that's because even though they're growing really consistently, they're not growing quite as fast as some of these other companies. So for me, Okta is just kind of my steady grower going in the background. It's not going to send off huge fireworks, but it's also probably not going to disappoint in the same way that a company like Zoom could. Now, looking at my strategy going forward into 2021, it looks relatively similar to 2020. I think one of the big trends that we're going to be seeing this year is companies moving to the cloud. And so while I could invest in the companies that are actually doing the move, in general, I think investing in companies that already have an established cloud practice is going to be a little bit more valuable. Think of the California gold rush. While everybody was going to California trying to dig up gold, the people who made the most money were the people who sold the picks and shovels to the people who wanted to dig up the gold. Companies like Cloudflare and CrowdStrike and Datadog are the picks and tools that companies are going to need to use in order to access the cloud market. And that is where I think the real value is going to be. Additionally, because a lot of these services are run by smaller companies, they have the potential to double and then quadruple in size without fully saturating their total addressable market. This might not be true with a larger company like Amazon or Apple. Now, finally, I told you I would let you know if I made any trades in or out of positions in the past month. So for this Vanguard account, I did not make any stock purchases or sales. I only added around $1,000 into this account to start funding my Roth IRA for the year, and I haven't yet deployed that to a position. I need to decide where I want to put that. And then similar to my Vanguard account, in my Charles Schwab account, I didn't make any stock trades in 2021. The last major trade I made was on December 21st when I sold out of around a third of my Zoom position and redeployed that money into Cloudflare and Datadog. So that is a full overview of my current stock portfolio as well as what I've done over the past month. Now, if you like this type of video, let me know in the comments. I don't know if I'm gonna make too many more of these unless people really like them, because I think they get a little bit repetitive after a while. Maybe I'll switch to quarterly updates or something instead of monthly. Anyway, let me know what you think in the comments. Make sure to hit the like button and subscribe if you liked the video, and I'll see you next time.